If you are one of those investors who are holding on to your cash for the upcoming IPOs of startups and unicorns that are lining up to hit the D Street in the new year, well, hold on and watch this video before you get ready to spend your hard-earned money. Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra. Do you know that more than half of the startups that are looking to launch their IPOs in the new year are still struggling to post profits? Of the 12 startups that have either filed their DRHPs or the draft red herring prospectus with the SEBI or are already looking to list this year, 8 have incurred losses. These include names of unicorns like FirstCry, MobiKwik and even Ola Electric. A back-of-the-envelope calculation shows that a combined loss of these 8 startups has stood at over 8,000 crore rupees, largely led by Swiggy, Oyo and Ola Electric. Besides these, the health tech startup like Portea Medical and flexible workspace provider Awfis and fintechs MobiKwik and PayMate have also reported losses in their latest annual findings. Oravel Stays, which operates the hotel aggregator app Oyo, has posted or narrowed the loss of about 1,286 crore rupees in financial year 2023 with the adjusted earnings before interest, tax, depreciation and amortization or the Ebitda of about 277 crore rupees. However, it did manage to turn its first ever profit in Q2 of FY24. For the current fiscal year, it also expects the adjusted Ebitda to nearly triple to about 300 crore rupees. Now, the country's first electric vehicle company, which is going to be filing for its public listing, Ola Electric, also reported a wider net loss of 1472 crore rupees for the financial year 2023. For Swiggy, its largest investor, Process, had said that the company's losses had also widened 80% in the financial year of 2023, indicating a loss of about $545 million. However, the company has reportedly narrowed its losses in the first half of fiscal year 2024 to about $200 million. But despite the staggering losses, some of these startups have managed to post a remarkable rise in the top line, the sales of the last fiscal year. While Oyo posted a 14.3% rise in revenues from operations to about 5,464 crore rupees in FY23, it was Ola Electric's top line that jumped nearly six-fold to about 2,782 crore rupees during the same period. FirstCry's revenue from operations also more than doubled to about 5,632 crore rupees in FY23, even as its net loss surged about 6 times to 486 crores. When we talk about Awfis operating revenues, they have also jumped 112% on a year-on-year basis to about 545 crore rupees in FY23, while it slightly narrowed the losses as well. The surge in the revenues of these companies indicates that the companies are actually focusing on scaling their operations prior to listing and also choosing to invest heavily on growth and sometimes at the cost of profits as well. Now, while it isn't mandatory for these companies that are IPO-bound, that are looking to list on these stock exchanges, to report a net profit to list or to launch their IPOs before turning profitable, the NSE norms definitely stipulate that at least these companies should have operating profit or earnings before interest, depreciation and tax for at least 2 to 3 years preceding the application that they are going to be filing. Of these 12 companies, there are only 4 firms that are about to launch their IPOs that are currently profitable as well. So, general insurance firm Go Digit, which is an e-commerce company, also a SaaS platform Unicommerce, also fintech major PayU and drone manufacturer Garuda Aerospace. These are the companies that are actually profitable, and these companies are also IPO bound. Now, Go Digit recorded a profit after tax of 35.5 crores for FY23 in its IPO filing as compared to a loss that was recorded a year ago of 296 odd crores. Unicommerce profit stood at 6.5 crore rupees for FY23 and that of Garuda Aerospace stood at 3.9 crores. PayU India, which is a fully owned company by Process, is the largest payment service provider in the country by the share of revenue. PayU India has been profitable for the last 18 months or so. But this video clearly aims to tell you that you should be absolutely cautious and not just go by the popularity of names that you see which are IPO bound or that are going to be listing on the exchanges. We should learn from the past. In the year 2020 and 2021, when we saw a slew of startups getting listed, many of them listed at very steep valuations without posting any kind of profits. The year that followed saw all of these valuations getting marked down and the stock prices falling from sky-high levels very, very sharply. And therefore, before you go ahead and invest in any of these IPOs that I've talked about, do speak to your own financial advisor and take a wise call on that. With that, we will wrap up this video, but do stay tuned as news and information follows on the world of business and stock markets only on Business Today television.
Babs Hindu Mandir Abu Dhabi in UAE is a traditional Hindu place of worship that is being built by